Hey, welcome to Stocks, Tech, and Beer, where we talk tech and stocks over a drink. Today I'm going to tell you the three catalysts I think can move the market lower. But first, let's take a quick drink. And now, if you don't like it, this part where I talk about what I'm drinking, just go ahead, skip a minute, get on to the episode, to the actual information. But I always encourage everyone to have a drink. If anyone doesn't have a drink right now, just pause the video, like the video, and then go grab a drink and come back. Doesn't really matter what time of the day it is. You're checking this out Saturday morning. Hey, time for a Bloody Mary. There's always a drink for every day of the hour, every hour of the day. And today I'm drinking a Old Nation Brewing Company. It's the Boss Tweed Double IPA. 9.3% alcohol by volume, so it's quite a doozy. It's a heavy beer. As you can tell, it's a nice hazy IPA, which is what I like to see. You can see through your beer. It's just not good. And this one, it's pretty solid. On the scale of 10, it's got some hops to it and a little bit of citrus. We're gonna give it a 7.2 out of 10. That's a solid rating on my scale. Yes, it looks like I drank half my beer already, but I assure you the whole 16 ounces is in here, at least until I took a sip. For proof, I took a video of it as I poured it, so no one thinks I'm getting blitzed before the show starts. This is just a big glass. It's ginormous. But yeah, the 16 ounces is 9% beer, just waiting to make me more interested. Okay, now onto the topic, the three things that could send the market lower. And the number one thing I think could send the market lower, this is no joke, I'm dead serious, or as the kids say, dead ass. Is this a comic site? I don't know. I was over at a buddy's house the other day joking around. He went a little far. I was like, no way. And he's like, dead ass, man. I was like, what? He's like, dead ass. What does that mean? He's like, you never heard of that? It's like short for dead ass serious. It's like, no, I've never heard of that. Sounds like something that happens after you sit in the toilet too long because you're playing some Candy Crush or watching episodes of Stocks, Tech, and Beer. Just trying to stand up and the circulation's cut off. You can't. That's what it sounds like to me. Whatever. Tangent over. Anyways, I think the market will have trouble once the economy actually reopens. I'm not worried about another shutdown. I'm worried about it actually reopening. Here's why. Now think about it. What stocks have benefited the most from the economy shutting down? It's tech stocks. I think Zoom Communication, Shopify, you got Peloton. All these are surging because people have to buy stuff online, or in the case of Peloton, people are afraid to go to the gym. And then you have all the FANG stocks. These are huge beneficiaries of the lockdown. These FANG stocks plus Microsoft make up 38% of the Nasdaq Composite Index and about 20% of the S&P 500. You got to remember these indexes, they're market cap weighted, and that means the bigger the company, the bigger the impact it'll have on the level of the index. So the largest, most important stocks of the indexes will lose their biggest growth catalyst, which is people being locked in their home with nothing else to do. So once that happens, all of a sudden they have to ratchet down their growth expectations. You can just look at Netflix last night. Their Q2 numbers were amazing. They had over 10 million subscribers. That was like 3 million more than even they projected for the quarter. But they said going forward, as the economy reopens, these growth expectations need to be tampered down a little bit. And this sent Netflix down 7% today. I think we could see some of that happen across the other FANG stocks. If that happens as a whole, we're going to start seeing the market go down. And actually the other two are kind of related to the economy reopening again as well, but they're different. But hey, let's get to it. The second factor, I think, will be the restart of the basketball and hockey season, as well as baseball and football starting up again. I'm serious. You might think I'm joking, but this is actually a thing. People are sitting at home, no jobs, nowhere to go, no sports to watch. So what do? Some people play video games, others start dabbling in the stock market a little bit. And you can see this really perpetuated in the Davey Day Trader phenomenon. Now, I think this guy is a genius. You hear people on CNBC, whatever, all these professionals kind of crapping on him for whatever reason. But he is a marketing genius. He started Barstool Sports out of nothing and turned it, I think he sold it for $600 million. So, this guy's going to be fine no matter what happens. His followers into this day trading, I don't know. We'll see. But, so the guy, Dave Portnoy, after he probably soiled himself as sports closed down this spring, thinking of what am I going to do, was like, well, there's a stock market. That's about the only thing that's open right now for fun, and he can make some money on. So he starts doing that. The people like Barstool is kind of founded on gambling on sports. They have a lot of things about betting the line and parlaying and blah blah blah, whatever stuff that's over my head. And so he gets a lot of the people looking to make a quick buck following him. So what does he do? He starts day trading, and he just sets up his camera like I am right now. He's got a better setup than I do, which I could change soon. I ordered some things, so you should see some better video quality and sound soon. Hang on. But anyways, this guy, he starts sitting there, he's day trading, he's yelling at the stock market, saying he's great. Warren Buffett's got nothing. The Renaissance technology guys can't top him. And he's just sitting there swinging his green hammer, telling the market to go, 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 and gets people like jazzed up about the stock market. And they start following him and they start trading. And he gets people interested, and that's great. But what all these people do, are these people, retail investors, as Wall Street calls them, what do they do once the economy reopens? They have jobs to go back to, and they got sports to watch. Are they going to leave money in the markets? I don't know. So this pullout could cause the stock market to drop a bit. Will this cause a huge drop? Probably not, but it could be enough in conjunction with those FANG stocks going down to send the market just low enough for all those momentum traders and trend followers start to bail or even short the market, and then that could cause a whole cascading snowballing effect lower. But hey, it's just a theory. I don't know. But the third one might be a little more serious of a theory than sports reopening. It definitely has a bigger impact on our lives as a whole. And that's, what happens when Congress stops their fiscal support, and what happens when the Federal Reserve stops injecting liquidity into the market. These are two kind of different things. But they're related. It's government entities. So they say the Federal Reserve is independent. It's not, very political driven. Anyways, let's start with the fiscal policy. We've seen the federal government supplement state insurance by the $600 a week. That's caused a good percentage of people to make more money unemployed as they have when they actually worked. So those people are now making more money, and they're going out and spending it in the real economy at restaurants or buying things, or maybe they're saving it. A couple of responsible people or small responsible people are putting to work in the stock market. But what happens once this gravy train stops? The spending and investing will stop. Some may even need to sell stocks to pay for everyday expenses, and that would be bad. Now, there's talk more fiscal spending coming down the pipeline here. I expect Congress to pass a major spending bill at the session that they're just starting up right now, and that ends sometime mid-August. We'll see that. We'll see this extended through election season, because no one wants to campaign as a person who cut off funding to those in need at an unprecedented time like this. Republicans want it, Democrats want it. The devil's in the details, but they'll come together and get it done. I expect probably within a month or so we'll see the next round of stimulus checks and things like that. And you got the Fed. I really think the Fed called the bottom of this stock market when they announced their QE infinity on March 23rd. They announced it, market went down a little bit because everyone was scared, but then well, Fed's got her back, don't fight the Fed, and then that market just from there. And the QE infinity was they went in, they bought stuff, they bought a bunch of junk bonds, and made sure the economy and the capital markets would continue to efficiently run. There'd be no liquidity interruptions to kind of cause problems. So the Fed and the QE infinity really helped stabilize the market when it was needed. But now when the Fed tries to unwind its balance sheet, what's going to happen? The market's going to have to absorb the bonds they purchased if they try to sell them. And that could be a little tricky. And it might even push interest rates up, which would also be bad. Higher interest rates mean all of a sudden these stable bonds and savings accounts look more appealing, whereas stock prices and overvalued stocks look less appealing. So people sell stocks, put money into bonds, and that would be bad for the overall market. Fed liquidity, I think, has been one of the biggest drivers of the stock market prices, really probably over the past decade, ever since they started doing these quantitative easing programs back in 2008, 2009. And the Fed tried to unwind these before, even when the economy was humming along great, and they had problems. I remember the taper tantrum back a couple of years ago, and then at the end of 2018, yeah, I mean, that whole 20% pullback then was really a Fed-induced pullback of raising interest rates and trying to shrink their balance sheet. So when they do that, it's the market goes down. So if we see either the Fed or the Congress take their foot off the gas pedal, that would be a huge catalyst to move the stock prices lower. So to recap, 3 things: 1, the economy reopening; 2, the sports season starting; 3, the Fed or Congress taking their foot off the gas of the economy. And until then, we'll just keep doing what we do. Cheers.